Good morning, Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Variscan Mines. Variscan trades on the Australian Stock Exchange as VAR. Hope you enjoy today's program. It will be available in on-demand replay about an hour after we wrap up at amvestcapital.com/replays. Important component of these events is Q&A, so please send in your questions and we'll ask them in real time of our presenter today. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please read this carefully. This call is most definitely for informational purposes only. So, Stuart, I'm making you presenter if you want to share your screen. We have today Stuart Dixon, Managing Director and CEO of Variscan, significant corporate finance and commercial experience across the natural resource and financial sectors. And most recently, he was the Managing Director and Head of Metals and Mining at Cantor Fitzgerald Europe in London. And prior to his investment banking career, he served in the British Army. Again, please send in your questions. And with that, Stuart, I understand your webcam's on the fritz, but we're going to hear your voice and we will imagine what you're looking like. Stuart, are you there?
I am, Campbell, and good afternoon to everybody in Europe and good morning to everybody in North America. And a really good morning to those who would have got up early in Australia. I'm talking to you live from Spain. It's a pleasure to be back out here on site, really invigorating, lots of good vibes out here as we get ready to recommence drilling on the San Jose mine as part of the Novales zinc project here in northern Spain. So what I'm going to do is, I know that from some of the attendees, you're long-term shareholders, which is great to be able to provide you an update, but there's also some non-holders, new folks, so I'm going to try to bring you up to speed as well. So I'll rattle through the slides. For those that want to see what I look like, there's plenty of pictures of me online, and I'm sure you'll be thoroughly disappointed. So I'm just going to change the slides. The disclaimer, the usual legal disclaimer applies for any investor presentation. So here's just a wrap on this slide of what's happened since I last updated the Amvest Capital audience. Pleased to say it's been absolutely transformational via the last drilling campaign. We had multiple discoveries of new high-grade lenses at the San Jose mine, and you can see there's some absolutely eye-catching intersections there. 17 meters at 12.5% zinc, another 16 meters at 3% zinc, 23 meters at 11.5% zinc, all with some very valid lead grades as well. We do focus on the zinc, and we don't publish zinc equivalent numbers, so as not to mislead anybody. We're very transparent to show people the breakout between zinc and the lead. But the really big takeaway from that drilling campaign, which I'll talk about in a moment, was it has proved beyond doubt there are unmined areas of this ore body still to exploit. And in particular, there are a number of horizons of mineralized lenses we believe are in situ and will present ore bodies for us to develop in the future. We've had a number of other areas of our business develop as well since we last updated you. We successfully raised $4.25 million in a very quick oversubscribed capital raise. A lot of interest coming out of all four corners of the globe. Pleasure to say that a lot of existing shareholders followed their money, and we're also attracted new shareholders into the company as well. So welcome to them. And I think what they're seeing, what we're seeing, which is just the huge potential of this asset, both from an existing point of view, what we know now, but also what we can see potentially coming in the future. And that's really manifests itself in a number of targets, additional targets, which we've identified at the mine. I'm pleased to say We have appointed a drilling contractor during fairly tricky times to find drillers at the moment around the world as exploration spend increases. You've still got the challenges of COVID, and in Europe, it's holiday season. So we're pleased to be able to welcome them to site next week. So to get going on our next drill campaign. So why don't I just give a little bit of a flavor of why I've said that it was transformational. And here's a chart published by S&P Global that showed how the market responded to those drilling results which we published. Firstly, you can see that our interval values are ahead of some of the other companies, in particular in the same commodity space. So completely validating the quality of the mineralization here at San Jose, and also acknowledging some extraordinary market performance that those results generate. And actually, as you can see, 224% intraday increase was absolutely stellar. And for me, the evidence is where now, when I look at the share price, it seems to me that there's a huge value gap between where we are and where we should be, and now presents a significant buying opportunity for those in our field. A number of calls this week saying, hey, what's changed? And I said, well, nothing. The quality is still there. The share price is just slightly misunderstood, quite clearly by a few. And there's a lot of folks who are interested to make use of that value gap, which, as you can see, is evidenced here. We were the stock in the sub 10 million at the time. We're now out of that bracket. It had the highest share price performance based on those results, and this is in of the whole of Q2 globally. So really significant drill results from our lead project here in Nevada, which is in northern Spain. It's in the Variscan Basin. It's in the province of Cantabria, and just showing you there on the map the proximity to not only the world-class former Rio Tin mine, which is literally 10 minutes down the road. I drove past it this morning, and that's a former Expiration mine, which closed in 2003, but also the infrastructure here. We're a 30-minute drive from Santander, which is an international airport, which has a deep water port, which has the seat of government of the region, which is really important, as that's where decisions around natural resources are made for this region. And obviously, we have routes to market not only through the deep water port, which I mentioned, but as well, we're very close to the zinc smelter in Asturias, run by Glencore, which is one of the world's second largest smelters. So we think there's a lot to like about where we are at this location, and then there's a number of project-specific advantages which I'll mention later on in the project in the presentation. So we know we've got high grade, we know we've got the right address, and really it's about taking advantage of all these pieces that are, or constituent parts, which really enable us to make a really successful project. So what I'll do is just remind everybody that what we've got an existing granted mining license, which has a significant amount of time to run. A lot of the permitting issues around when people talk about development scenarios here do not apply. And then what we've got is a much larger exploration area surrounding the San Juan mine, which is going to give us scale and gives us significant potential to really grow our company as we look to find more step up ore bodies to bring into the project. So as you can see, this is a brownfield project, proven mine, proven processing, still with a lot of greenfield exploration upside. And why do I say that? It's because I was tramping through the ground earlier this week with our exploration team, and you just see very small workings through the hillside. And what they aren't is they're not extensive workings. There's certainly no development at depth, and they are like little waypoints for us, these workings, for for vectoring on areas of mineralization, because we know that they haven't fully exploited it, because we can see it at the mine, and we proved that through the drill bit. So if earlier workings were not developed then, and then they weren't developed later when they have much better technology for the mine, it lends us to firmly believe that, or leads us to firmly believe that there's a lot of untapped zinc still in this region, which we pegged. And that's really manifested itself in delineating some of the scale of this project. So as you can see, we've delineated 2 parallel trends, one of 9 kilometers, of which the San Juan mine sits on. As you can see, there's plenty of other drilling activity that we plotted there historically running along these trends. So this is trends which have been validated by either small-scale mining and or the drill bit. So again, de-risking the project significantly. And as you can see, they're linked to topography, which is indicative of the karstic nature of some of this ground as well. So you're seeing big changes in elevation, which we again find useful for vectoring in on mineralization. I'll talk a little bit more about that in a minute. So as I said, the mine and the trend is spitting distance from Rio Zinc mine, and that's really well worth noting as a world-class mine, and obviously it's the same geology, same host rocks, mineralized dolomites. The Rio Zinc formation that hosted that mine is the same that we have for our ground. So it's really important read across that not only are we close, but we also have the same rocks. So let's dive into a little bit more about the drilling that we did earlier this year. And this is just to remind and revise of some of the really interesting intersections that we were finding. And as you can see, we've already identified some very clear trends within that mine area. And the top left-hand focus box really shows what a small area we're talking about in the context of our project. So again, that leads us to believe there's a lot of scale potential here, and then you add that to the quality of those intersections that we're getting, suggests to me that we really could have a tiger by the tail here. And really, what we're planning to do next, and I'll talk a little bit more about that in the future, is to look how we maximize those trends, both new trends and extend those trends through the forthcoming drill program. That's just an indication of the ore, of the drill core rather, that we extracted in the last drilling campaign. Actually, we get decent core recovery and some very high grade zones within it. It's not continuous, I think it's worth saying, and that is indicative of this stats lenses presentation of how mineralization occurs here. I'll show you a slide shortly. So we don't get big continuous ore bodies, but we get very frequent stacked lenses and pods of zinc mineralization, which is consistent with classic NVT style zinc deposits. This is just a reminder about the Catheter Trend, which is part of the San Jose mine. And why I'm showing you this, it's really just a stark illustration of the value of testing depth. So the big brown horizontal feature you can see there is effectively the main mine gallery tunnel that goes through the mine. And what had been done previously was mainly historical drilling and excavation works had mined up into this hill, and what had not been done was to test depth. And hey presto, when we test depth, we found significant. These are not deep drill holes, as you can see. We're almost straight into the mineralization from the gallery level, so it's immediately accessible if we were looking to exploit it. I think it's really important. That means our drilling is super efficient as well, because we haven't got to spend lots of money on barren drilling meters through overburden to get into some of these mineralized horizons. So it means that Drilling is cost effective, it's efficient, we know pretty quickly whether we're going to be in it or out of it. And as you can see, it's delivered some very catching results. And then this is just taking a slightly larger step back on that north-south long section. So the right-hand side is drilling down is where we just closed down, and now we've zoomed out and we ran the drill bit further down that gallery, like Catheter Trend, for about 400 meters, kept drilling down and up in some instances, and as you can see, we kept finding lenses and pods beneath the main gallery level. We believe that currents will actually be replicated through many other parts of the mine because it's just not exploited in that way. So that then again indicates to us that there really is significant scale potential and accessible scale. Again, you can see all of these, the red bars effectively are the mineralized zones, are very close to access. So that would mean it would be reasonably efficient and cheap to exploit in the future. So I think I mentioned here about lenses, I mentioned about pods, and I talked about stacking of them and not really continuous. And what we've done here is really take a step back, do a bit of deep thinking with the team this week and say, okay, well, what's this looking like? And we believe that the styles of mineralization are akin to Pine Point, which is in northwest Canada. It's currently being developed. It's a former historic mining area back in the time, and more recently Cisco bought it from a junior. And it's very similar because you're seeing karstic structures where sulfide minerals have preferentially replaced some of the carbonate host rocks. And it's almost, I mean, the illustration probably says more than the words, but as you can see, the read acrosses there are significant. It's also akin in scale. Pine Point is much larger at this moment in time because we haven't fully explored our areas, but as you can see, that it's similar in scale, and the resource potential could equally be the same. So they've got about 50 million tons at an average of around 4.5–5% zinc. I think we feel that, that the parallels could be worth exploring there, and it certainly gives us a good geological basis for further exploration in the future. And then just taking that a little further away from the concepts to look at much closely is when we look at how the mineralization presents itself, and you're seeing again very, very similar areas of dolomite, the white dolomite in the top pictures. And then you're seeing that the browny grey salarite, which is hosting the zinc. And you know, if you look at those pictures, I mean, it says everything to me that, you know, very, very similar, another world-class deposit, and we believe that this has the genuine potential to be of something similar. So very exciting for us to be able to make those parallels in a very reasoned, considered way. And what are we going to be doing about it? Is this. So this is just our underground drilling targets. It's been invented from not only the drilling that we did historically, we did some structural geology work on it, which identified a lot of faulting trends, so that you can see that interpretation on there. We layered on there some old historic surface drilling to try and build a more vivid picture. And as you can see, we've got plenty of drill targets, just in a very small area in San Juan, the San Juan mine. And we'll be looking to test for vertical and lateral extensions. And vertical is both up and down in our case. So that's really key. And then as a second order, looking for those new lower lying lenses. We see that as something that's a thesis which has delivered results already, and see no reason why it can't deliver results in the future. And then really, thirdly is definitely a third order priority is to infill some of those mineralized areas that we've got, to test for continuity, look for potential tonnage, from areas where we've already had drill bit success. So that's what we're trying to do. And at the same time, we're also looking at the wider picture here. And certainly what's come out of discussions and field work that's been happening in between the drill campaigns is to look for additional trends that we can find beyond the existing mine workings, and so of San Juan. And so what you can see, certainly we're looking north and south and south east of the mine, is we're seeing green dots, which are old mine workings and mine accesses. And we were in a couple earlier this week, and they're very small and they're very unsophisticated. But what they are is, as I said earlier, they are a waypoint to further mineralization. And what's consistent pretty much on all of this picture is that predominant north-south trend of workings and north-south trend of presentation. So it tends to suggest that there will be more, which is consistent with MVT deposits as they cluster, very rarely found in isolation. And so we're really excited to be able to identify that at a slightly bigger regional picture. And by no means is this the full extent. I mean, this is all well within the license area. So plenty to go at during this campaign and actually into the future. So lots to do as we continue to progress. As I've said many times before, we've got, and I said at the top of the presentation, not only at the regional level, we've got a lot of the enablers in place. We certainly have at the local level. And this is a slightly old drone shot of the mine site where I'm talking to you from. That's been tidied up significantly, invested in to give us a lot of high quality 365 working environment to get things done. There's just some snapshots there. And I think just to leave you with another thought, you know, the archives here are quite extensive. They've allowed us to pull together a historic drilling database of some 90,000 meters. Some varying quality, that drill data. But we also have been able to find a lot of the processing, metallurgy work, albeit from a different era, but it shows us that the ore from this area is amenable to processing and producing a concentrate which is saleable. We're saleable at much more prices. So that gives us future confidence for resources which we find here will be of sufficient quality to take to market. So lots to do. We're cashed up, ready to go, and I think Variscan's got a super exciting time ahead of itself as we move forward. And that's against the backdrop of a zinc price which is continuing to perform robustly as we hover around $3,000 per ton currently. And I've just shaded there where we were since I last spoke to the Amvest audience. So we definitely had a price improvement. So I see really this all coming together very nicely as we move into the future. So I think that's a very quick, on-point presentation, and I welcome any questions that the team and the webinar participants may have. Thank you for your attention.
Excellent. Thank you. Thank you for the update and introduction. When is your mining license expiration date?
When does the mining license expire, was the question?
Yes.
So we've got another 15 years to run on the mining license. And that's without any further extensions which may or may not be granted at the federal level.
What is the permitted production amount?
There is no limitation on production amounts.
Do you have any working commitments?
Can you just repeat the question, Campbell?
Do you have any working commitments?
Not in the mine area. The mining license tenement area is free of commitments, save for we need to demonstrate currency, and we're able to do that all the way through our annual plan of labores, which is your annual plan of work. and there is no financial or specific metric that we need to deliver against for the mining license. For the exploration license, which I talked about, there's a minimum spend requirement on it. When it was granted, it had a €4 million minimum spend, and obviously we've been spending that on that, albeit not as fast as we would have liked, given some of the challenges of COVID. So we've been largely focused on San Jose, but yeah, all fairly simple and straightforward and achievable.
Does Variscan have 100% ownership?
Yes.
Are there royalties or other payments on the property?
There is no other payments on the property, save for unless we wanted to acquire the surface land area where I showed the drone shot. That's owned by a local family who are a shareholder, and I need to double check. I think there's a small royalty payable to them as a former owner of the mine.
All right. Thank you. I'll pass it to Artie. Artie?
Thank you. So since this is an old operating mine and you have some infrastructure already in space, what are the things that you can have some cost advantage when you will be restarting the mine potentially?
I think that there's a few advantages which spring to mind. I think one is time. If you look at the time taken for the average exploration project to bring it into production, one of the biggest time delays is around the enabling factors, putting in infrastructure, putting in roads, power, constructing various different things. We don't have to do that. So we certainly bought ourselves a head start, and I believe we've also got an advantage because we don't have to pay for some of that. So a lot of those costs for CapEx, in theory, should be lower. And if your CapEx is lower, in theory, the tonnages required to be delineated it should also be smaller as well. So to make a restart viable, and that's why you end up with these horrible projects which end up with having to be huge tonnages to justify the significant CapEx, which is also required due to their remoteness or various other reasons. So what we've got here is certainly a head start. I feel very comfortable saying that on the average exploration project. If you compare about their journey to potentially looking at starting operations versus our journey to potentially restart operations. So there's certainly key advantages. Obviously, we don't have permitting risk in terms of mining, having already got a granted mining license. And I think that's a significant advantage which shouldn't be underestimated, particularly in a European context where there have been case studies where that has taken a lot of time. And again, I use that as an advantage in that sense. So I think I think those in particular are key when I'm looking at restarting operations.
Thank you. Are there any old mine tailings at the site?
There aren't actually. It was cleaned up very extensively way before, decades before we arrived. So there isn't any tailings advantages of reprocessing early tailings, or there are no disadvantages of having tailings storage management facilities issues either. So we understand a lot of the tailings were repurposed historically for other usage. So as far as we're concerned, we start with a blank piece of paper on the tailing side, and I think that's going to be a good place to start, rather than having any legacy issues.
Thank you, Stuart. Adam?
Oh, great, thank you. Thanks, Ernie. Couple of questions for me, Stuart. And by the way, congratulations on the encouraging recent results. question that came to my mind. Stuart, can you hear me okay?
Very clear, thank you.
Okay, good. Just wanted to confirm that. Question that came to my mind on one of your slides, where you showed one of your last slides, where you showed a lot of the sort of newly discovered small historic workings and whatnot. What's the thought there as far as doing drilling from surface, and what are your drilling costs, both underground and then surface drilling? I'm not sure if you've done any surface drilling yet, but what's the projected cost there?
Mm-hmm. So I've looked at these and we've been discussing these. So we believe that there may be opportunities to both surface and underground drill some of these. And it's very dependent on which area we're talking about, and it's very difficult at this stage to say, well, this one's definitely going to be underground and this one's definitely going to be surface. We haven't surface drilled yet as a company here. We have a surface drilling application pending for the wider Buena Ora area, the Expiration package, which I showed you earlier on. So we feel comfortable looking at underground drilling exploration for some of these old workings. We have been in discussion with a drilling company about some of the smallest rigs that they potentially could provide, and there's definitely one or two targets which we believe could be suitable for underground drilling there. So, and also we are in the process of putting together an application for surface drilling permit application for this area that you can see on screen, because there isn't one currently, because we've been able to do so much drilling underground, and there's still plenty to go out, as I've already shown you on the images. So in terms of cost, we're at 120 euros per meter for the underground drilling on per meter basis. All in, you need to add another 5,000 euros for mob and various other ancillary costs. So it's not the cheapest underground drilling that there is globally, but it's certainly not the most expensive. And we're using contractors which have been well recognized, used by a number of other international, including ASX listed companies. So, to some extent you pay for what you get, and we feel comfortable doing that. And that's been our approach to date.
Okay, great. Sort of a big picture question here, Stuart, is how much at the current grades that you guys have been hitting and the historic grades that were mined, how much tonnage do you feel that you'd have to identify in order to, to put together a scenario, a mining, restart scenario, and in such a restart scenario, it's my impression is, you'd need, potentially new underground access, a new mill, and new tailings. Is that how you see it?
I think there are a couple of scenarios which we can run. If you want the base case of thinking, I can tell you historically that Novales had a resource roughly of about 0.6 million tons, which is very small, running around 7% zinc. There's certainly seen historical records referring to that. It's very difficult to focus on, is that a remnant resource? Is that a mid-cycle resource? They weren't as diligent in some of the resource estimation work that we would be familiar with today. So, but I think what it does evidence is actually reasonably small tonnages could possibly work to the grade. If your primary objective is to get into production, then that's it. But I don't think it would, to be absolutely clear, justify the quality of this resource, potential resource rather, of this ground, because I think we all think it's much greater than that. And I think if it was a modest resource, modest high-grade resource, I think, firstly, we wouldn't need any additional underground access. We've got plenty of it already. We'd probably look, rather than build a brand new, shiny, fixed permanent mill, we'd probably look at, small scale modular operations. We'd probably look at partnerships if we go down the early development scenarios. But again, we might just take a little more time, get more comfortable with the size of the resource to be able to justify some of that spend. So that's really where we are. And I think the other thing is markets tend not to thank you too much for coming out with small resources and early cash flow. There's very much a dichotomy of shareholder views on that, or investor views on that. And I think certainly we'd want to be able, if we were going to look at early cash flow, and we've talked about the potential for that compared to other projects, and we talked about it today, is that we want to make sure it was a fully robust scenario and underpinned by size and grade, which I think we will get to.
But sort of, I guess what I'm getting at here is regardless of the size of the resource you define, the major capex will be the mill and the new mill and new tailings.
Yeah, I think that's right. I mean, I'm looking at the current plant now, and it's historical plant, and it looks rather sad, rusted and completely unusable, and actually more a piece of architectural heritage, industrial heritage rather than anything else. So we would need to spend money on that. But as I just alluded to, I think there are different ways you can approach your processing. You can take a very fixed, heavy capex approach, and I think you can take a slightly lighter capex approach. And I think that would be dependent on what we think the life of mine and the throughput, all of that looks like, and all of that stems from how much of a resource we've got. So, and you're absolutely right, tailings will be a significant expense for that. But I think we'd look to do some fairly innovative things on that as well, certainly given the location.
Could you avoid is permitting new tailings a challenge in Spain, and could you potentially avoid needing to permit tailings by depositing all the tailings back into the historic stopes?
I'm not going to generalize about Spain because we are not looking at what has happened in other regions. And I've been very clear historically about the decision-making environment in Spain, about why one region makes certain decisions will be different from another. So I try to not make those generalizations. I think that tailings facilities globally have come under much greater scrutiny from authorities, given what's happened in various different locations, and Brazil and Russia spring to mind immediately. So I think quite rightly there will be scrutiny on the stability and quality of the facility we put in, and that's a separate piece of work that we'll have to do down the road. And when I said innovative approaches, one of them might include effectively a backfill type operation, and there is evidence of that in some of the smaller scale workings historically, where we can see tailings and waste rocks being used as stabilization or backfill into certain other areas. So it's a concept that I think would be easily understood here.
It seems to me, because you're finding ore sort of above and below historic workings, does it make more sense? Does it make sense logically to basically create a cement backfill and backfill those old workings to give you better access to the new, potentially to the new ore bodies that you're discovering?
We'll answer that question when we've got the mining engineers looking at mine design. I'm just not in a position right now to give you a sensible view on that. Our primary objective right now is to continue finding high-grade ore, and once we've got little bit more confidence, looking at putting our arms around the shape and scale of this opportunity. For sure, we'll definitely look to develop those mine plan scenarios and bring in the right people to be able to answer your question, but we're not quite there yet.
Maybe just for the audience and whatnot, maybe you could just briefly go over the historic metallurgy. What were the historic recoveries of zinc and lead, and do you guys since this mine has been closed down and technology has improved, what kind of recoveries, and I realize it's early days, but what kind of recoveries do you think, you could potentially get?
I'd have to go back and look at the recoveries specifically, but what I do know is the concentrate that they were producing tended to be around 58% zinc. So they were clearly producing a very saleable product from quite a very established conventional flotation approach. That's not changed too much, although it has been enhanced by modern technology. So one would hope that we'd certainly be able to match that and or potentially exceed that with these kind of similar grades that they were mining from our drilling. So on that front, I feel confident. In terms of the recoveries, I've just got 90% in my head, but I would want to go back to look at the archive records to make sure that that was a fully validated number.
And historically, did they make a lead concentrate, or did lead go to the tailings? What happened historically there?
There is evidence of lead concentrate being produced, yes.
And where historically, where do you know where they sent the zinc? I presume they sent the zinc to the local smelter that's nearby. Where did the lead go, or do you have any idea?
I don't actually.
Excellent. If I can stump you, then I'm doing my job.
Well, because yourself, job done. But I'll certainly revert back to you on the recovery of the metallurgy and the where they saw the lead concentrate too. That's an interesting question for us to follow up on.
And Stuart, maybe just getting back on conceptually, what kind of a production rate, are you looking to target?
I think we don't look at the production rate at the moment as being the target. As I said, our focus at the moment is the business of exploration. And once we've got to a point of exploration, that we can then look at what type of production rates that resource or that ore body then starts to look like, I think then we'll be in a much better place to sensitize which is the optimal production rate. Because, as you know, production rates in the abstract don't tell you a great deal apart from potentially, right, you're going to produce X tons of zinc, but how economic it is also a function of that question. So I think, again, we're at a point where we haven't done that work. It's a little too advanced for where we are as a project, but it'll be coming around the corner fairly quickly if we keep drilling like we are.
Yeah. I mean, I guess my thought process here, Stuart, is that, I agree with what you're saying conceptually, but practically speaking, if you are considering using the existing infrastructure, you're going to have certain bottlenecks, which will limit your production rate, to a certain extent, unless you go for new infrastructure. So I was sort of curious if you had sort of conceptualized that.
think at the moment we're content that we've got a hell of a lot further down the road than a number of other peers would be, and we have had some thoughts around this, but again, we haven't done the detailed studies that one would normally do that, to make sure it all stacked up and stood scrutiny and was robust, more importantly. So again, we're going to continue what we're doing and bring in that work stream at the right time. Now's not quite the right time, but we'll be coming around the corner. And you know what? If we get to that stage, I'm looking outside the window and I'm thinking, we've certainly got more than enough real estate here, and there's a willingness to make this work. So we would find a way.
Excellent. There was. I remember now. I was going to ask you. You guys are currently only listed on the ASX.
Correct.
And
correct.
I guess I was wondering if you had plans for additional listings, and then if so, would you be looking to potentially conform to, a Canadian 43101 in terms of, upcoming, potential resource statements, or what's called in Canada PEA scenario for when you guys are at that point?
We're not considering a dual listing at this time. I don't see a driver for it at the moment. We've been successful in raising capital globally with our Australian listing, and we find that the liquidity on the ASX has improved significantly off the back of drill results. So when I'm looking at liquidity, I'm certainly not worried about the ASX. When I'm looking at access to capital, I don't see a driver right now. When I'm talking about value, I do look at it a bit more carefully, and I think there's possibly some work to be done in that area, whether we would see value uplifts on other exchanges. But it needs to justify the significant time of the dual listing, the distraction, the time zone management. I've experienced this on the other side of the desk, and so it really needs to be thought through very carefully. And I'm often asked, actually, why wouldn't we get a European listing, either in London or Spain, like a number of other operations have done? And again, we've looked at them. We've made a reasoned decision not to do anything. And in terms of looking at reporting, then we report under JORC code in Australia, which is, to my mind, equally as robust, if not more so in certain areas, compared to SIM and 43101 in Canada. So we feel comfortable with the quality of reporting. And yes, we would like to move towards the equivalent of a PEA scoping study in due course, absolutely. And that will be done in accordance with probably JORC in Australia, or will be done in accordance with JORC in Australia. And that's the current level of thinking. So if you've got a really burning reason why we should look at it in a different way, then I'm all ears. But at the moment, we think it's pretty adequate for where we are.
All right, excellent. Let me, I've monopolized your time. Let me pass it back to Campbell for any additional questions from the audience, or to Erdy if he's got any follow-ups.
Actually, we're good with questions, and we've used up almost the whole hour. And I want to thank everyone for tuning in and for your great questions. And please share your feedback when you log out. And you can get a copy of this at replay at amvestcapital.com/replays. I'm actually going to pass it back to Stuart to close us.
Just thank everybody from Amvest to our existing shareholders, to our new shareholders. Thank you for your support. Thank you for your interest. Thank you for your great questions. If you have any further desire to continue talking, then please feel free to reach out directly to me. We're open for business. I get lots of shareholder inquiries. I'm very happy to field them, and hopefully you'll continue to support the company as we continue to grow and embark on our next set of exciting drilling. So stay tuned for more.
Thank you. Good day.